Okay, let's unpack this. We're diving deep today into some source material shared by one of our listeners, the learner.
Right.
And they've pulled together analyses on 3 companies, very different sectors, actually. General Motors and automotive, Akamai Technologies doing cloud services and cybersecurity, and Moderna in biotech.
Exactly. 3 really distinct players. And our goal here is basically to sift through these documents, pull out the essential insights.
The key stuff.
Yeah, the key numbers, the strategies they're pursuing, the challenges they're up against. Think of it as a shortcut for you to get a handle on what's really going on with these 3 based purely on these analyses.
And what makes them interesting right now, according to the sources anyway,
Yeah.
is that they're all going through these huge shifts, either big transformations or they're navigating some really complex market dynamics. You've got GM trying to shift to EVs, Akamai pivoting hard towards security and cloud, and Moderna trying to build out its pipeline beyond COVID.
Absolutely. And one thing the sources are really clear on, they repeat it several times, so we have to stress this too.
Super important.
Yeah. Everything we discussed today is based only on this source material. It's purely informational. It is absolutely not financial advice.
Right.
If you're thinking about investing, you need to do your own research, talk to a licensed financial advisor. We're just walking through the information presented to you.
Couldn't agree more. It's about understanding what's in these analyses. So, okay, let's get started. First up, General Motors. Detroit giant going through a massive change.
Yeah, GM, global automotive leader, based in Detroit, obviously. Brands everyone knows. Chevy, GMC, Buick, Cadillac. They operate, in over 100 countries? The main story, the core narrative in these sources is this significant transformation they're undergoing. It's all about electric vehicles, EVs, autonomous driving, and sustainable mobility more broadly.
Okay, let's look at the numbers the sources give us. This is Q1 2025 data and some projections for the year. Stock price mentioned, $48.69 as of May 24th, 2025. Q1 revenue came in at $44.0 billion. That's up a bit. 2.3% year over year.
Decent top-line growth. But the sources then show some shifts in profitability for that quarter. Net income attributable to stockholders was $2.8 billion.
Okay.
That's actually down 6.6% compared to the year before. And adjusted EBIT, another profit measure, also dipped. $3.5 billion, down 9.8%. So those core operating profit figures, they were lower in Q1.
But wait, here's where it gets interesting, right? Q1 diluted EPS earnings per share jumps by over 30% year over year to $3.35.
Yeah.
How does that work if net income and EBIT are down?
That's a great question, and the sources actually explain it quite clearly. They pin that big EPS jump mainly on 2 things: share repurchases.
Oh, okay. Buying back stock.
Exactly. And also some improvements in operational efficiency. So while the underlying business profit, net income or EBIT was down in the quarter, these financial moves, especially the buybacks, gave a significant boost to the per share number.
Right. It shows EPS isn't just about profit, it's about the number of shares too.
Precisely. It's a good reminder of that dynamic.
Okay, so looking forward, the sources cite GM's projections for the full year 2025. Net income expected somewhere between $11.2 billion and $12.5 billion. Adjusted EBIT, $13.7 billion to $15.7 billion.
And strong cash flow projections, too. Automotive operating cash flow, $21 to $24 billion. Adjusted automotive free cash flow, $11 to $13 billion. These are big numbers.
And that cash flow probably connects to how they're returning capital.
Directly. The analyses mentioned GM approved a 25% hike in their quarterly dividend back in February 2025.
Okay.
Took it from $12.15 per share. The sources sort of frame this as a sign of confidence, despite all the spending on the transformation.
And wasn't there a big share buyback program too?
Yes, a $6 billion program announced.
Yeah.
And part of that was a $2 billion accelerated share repurchase, an ASR.
Right, an ASR. That's like a quick, big buyback, isn't it?
Yeah, basically lets them buy a large chunk of stock quickly. That was planned for the first half of 2025, expected to wrap up in Q2. It shows they're serious about returning capital alongside these big strategic bets.
So let's talk about those bets. The EV transformation is obviously front and center.
Absolutely. The sources say they're pursuing an all-electric future pretty aggressively, aiming for a diverse lineup of EVs across their brands. They mention examples like the Chevy Silverado EV.
And the Cadillac Lyriq. Saw that one.
Exactly. And plans for more new models across different segments.
And the tech behind it. Batteries seem key.
Huge focus there. The sources talk about heavy investment and trying to cut costs through innovation, like these lithium manganese-rich or LMR batteries.
LMR, what's the goal there?
Affordability and extending range, mostly, making EVs more practical. And interestingly, the sources note they brought in Kurt Kelty, who used to be at Tesla, to lead this battery effort.
Pulling in talent from competitors.
Yeah.
What about autonomous driving? Cruise.
Yeah, Cruise, GM's subsidiary there. Well, it's faced some real headwinds, according to the sources. They mentioned GM stopped funding the Cruise robotaxi business in Q4 2024.
Stopped funding. That sounds serious.
It resulted in a $500 million charge, so yeah, a significant setback. But the analysis suggests they're still looking at partnerships or other investments in that tech. It just shows how tough and expensive that autonomous space is.
Okay, shifting outside the company. How are global factors playing out? Trade, regulations.
The sources definitely point to impacts from trade policy shifts, like GM suspended exports of some vehicles, including that luxury line, the Durant killed, from the U.S. to China.
Why?
Escalating tariffs, according to the analyses. So a direct hit from geopolitics.
And regulations. Emission standards are always a big topic.
Right. And the sources state GM lobbied against California's stricter emissions rules.
Okay, what was their argument?
As presented in the sources, they argued for a single national standard, said it was needed for affordability and giving consumers more choice. We're just relaying their position as reported, of course.
Understood. Impartial reporting. So, summing up GM's outlook based on these sources.
Well, it's framed heavily by this massive industry shift. Their focus on EVs and sustainability, the sources say, positions them for future growth, potentially.
But challenges remain.
Oh, absolutely. And they're called out clearly. Regulatory uncertainty, like with emissions, ongoing supply chain issues, especially chips, and just fierce competition from old rivals and the new EV players.
Analyst views mentioned.
Generally positive is how the sources put it, citing strong brands, the financials, the strategic investments. But there's a caveat. Success really depends on navigating all these complex shifts effectively.
And key risks the sources highlight.
Those regulatory changes, supply chain problems, competition, and the constant need for expensive R&D because tech changes so fast.
So the big takeaway on GM from this material: deep in a massive transition, balancing legacy with future bets, juggling external pressures. A real balancing act.
Definitely. Okay, ready to move to Akamai.
Let's do it. Akamai Technologies, cloud services, security.
Right, a leader in that space. Delivering, optimizing, securing online content, business applications that run this huge global network. The sources call their services integral for sectors like e-commerce, media, finance, government. Crucial infrastructure.
Okay, the numbers. Q1 2025 financials and projections, again from the sources. Stock at $75.84, around May 23rd, 2025.
Yep. Q1 revenue, $1.015 billion. That's up 3% year over year, or 4% if you adjust for foreign exchange.
And margins.
Non-GAAP operating margin held steady at 30%. Non-GAAP net income was basically flat year over year, $256 million. Adjusted EBITDA did grow, up 6% to $441 million.
Okay, but then there's this GAAP versus non-GAAP thing the sources seem to emphasize here.
Yes, this is really interesting with Akamai. Their GAAP net income, the standard accounting measure, was $123 million. That's down 30% year over year.
Wow, big difference.
Huge difference. GAAP EPS was $0.82, down 26%. But then non-GAAP EPS was $1.70, actually up 4%.
So what accounts for that gap?
The analyses point to standard adjustments like stock-based compensation costs, amortization from acquisitions, things excluded in non-GAAP. It really gives you two different lenses on their profitability in that quarter.
Definitely shows you need to look at both. What about their outlook? Q2 and the full year.
For Q2 2025, they're projecting revenue between $1.012 billion and $1.032 billion. Non-GAAP EPS forecast is $1.52 to $1.58. For the full year 2025, revenue projected between $4.05 billion and $4.20 billion, and non-GAAP EPS between $6.10 and $6.40.
Now, a key part of the Akamai story seems to be the business segments. How does that break down?
Crucial point from the sources, yeah. Revenue comes from three main buckets. First, security. $531 million in Q1, up 8% year over year. That's a definite growth area.
Okay, growth and security. What else?
Then there's delivery. This is more their traditional content delivery network business. That was $319 million in Q1, but it was down 9% year over year.
Down 9%. That's notable.
It is. And the third segment is cloud computing. That brought in $165 million in Q1, up a strong 14% year over year. Another growth engine.
So security and cloud are growing. Delivery is shrinking.
Exactly. And the analyses point out that security and cloud combined now make up 69% of their Q1 revenue.
Almost 70%.
Yeah, which really underscores what the sources call Akamai's strategic focus. They are actively transforming into more of a cybersecurity and cloud company. It's a major pivot from their historical core.
That is a big shift in the business mix. How are they using their cash during this capital allocation?
Sources mention strong cash flow, and they're using it for share buybacks. Repurchased 6.2 million shares just in Q1 2025.
How much did that cost them?
About $500 million, average price of $81.19 per share. So the analyses note this commitment to returning capital alongside the business pivot.
What about the stock performance itself? That $75.84 price. How does that compare?
Well, as of May 23rd, that price was roughly 29% below its 52-week high, which had hit back in October 2024. The sources use the word volatility to describe the stock's movement.
And analyst views, what do the sources say about sentiment?
Mixed is the term used in the analyses. There's an average 12-month price target cited around $107.65, which suggests potential upside from that $75 level.
That was always a but.
But yeah, the sources also say some analysts are cautious, specifically pointing to that decline in delivery revenue and what they see as conservative guidance from management, so not universal bullishness.
And their strategy reflects this pivot, right? New products.
Absolutely. The focus is squarely on expanding the security and cloud offerings. The sources give a specific example. They introduced a firewall for AI.
Firewall for AI, addressing new threats.
Exactly. And they've also apparently secured some big multi-year contracts with major tech companies for cloud infrastructure, so making headway in those growth areas.
What are the key risks highlighted for Akamai in the sources?
Well, that declining delivery revenue is definitely called out as a potential drag on overall growth. They also mention anticipating heightened economic volatility, which could squeeze revenues and margins.
Makes sense.
And, of course, just the intense competition in both cybersecurity and cloud. Those are tough markets.
So the bottom line on Akamai from these sources, a company in mid-pivot, actively reshaping itself towards security and cloud, managing declines elsewhere, and battling fierce competition. A transformation in progress.
Well put. Shall we move to our third company, Moderna?
Yeah, let's talk Moderna. Biotech. Known for the COVID vaccine, obviously. mRNA technology.
Right. That messenger RNA tech is their platform. It essentially tells your cells how to make proteins to fight disease or trigger immunity. SpikeVax, their COVID vaccine, really put them, and mRNA tech on the map globally.
But the sources stress they're moving beyond just COVID now, right? Expanding the pipeline.
Significantly. The analyses detail a pipeline that now includes vaccine candidates for RSV.
Respiratory syncytial virus, nasty one for kids and older adults.
Yeah. Also CMV, cytomegalovirus, EBV, Epstein-Barr virus, VZV, the shingles virus, and they're even moving into cancer immunotherapies. It's a really broad push based on that core mRNA platform.
Okay, let's look at their Q1 2025 financials. Per the sources, total revenue. Wow, $108 million. That's down 35% year over year.
Yeah, a very sharp drop. Net product sales, which is mostly the COVID vaccine, were only $86 million of that.
And profitability.
They reported a net loss of $1 billion for Q1. Now, the sources do point out this is actually an improvement from the $1.2 billion loss in Q1 of 2024.
So still losing money, but less than before.
Correct. And crucially, the analyses highlight their cash position. Still very strong. $8.4 billion in cash and investments as of the end of March 2025. That gives them runway.
Definitely need that cushion during a transition. What are their projections for the full year 2025?
Revenue forecast is between $1.5 billion and $2.5 billion. And they have these big cost reduction targets, aiming to cut cash operating costs by $1 billion this year, 2025.
$1 billion. That's substantial.
And another $500 million planned for 2026. The sources say the goal is achieving a more sustainable financial profile as COVID vaccine sales decline.
Okay, back to the pipeline. What progress are they making beyond COVID?
Well, on the COVID front itself, they're pursuing approval for a next-gen vaccine, mRNA-1283. The PDUFA date, the FDA's target decision date, was mentioned as May 31st, 2025.
Any wins yet from the new pipeline candidates?
Yes, a tangible success noted in the analyses is their RSV vaccine, mRESVIA. It's received approvals already in several countries: Australia, Taiwan, the UK, Switzerland. That's a positive step.
Good news for diversification. What else is close?
They have a combination flu-COVID vaccine candidate, mRNA 1083. The sources say it hit its goals for an interim efficacy analysis. They expect to file for regulatory approval around November 2025.
And cancer. You mentioned oncology.
Yeah, they're expanding there with something called their checkpoint program. The analyses describe it as showing promising early data, but that's likely longer term. And tying back to costs, the sources mention reducing R&D spend selectively while still funding these key programs and also resizing their manufacturing footprint.
Makes sense, cutting back from pandemic levels. But
Yeah.
they're facing headwinds too, right? Regulatory, market challenges.
Definitely. The sources highlight some specific ones. On the regulatory side, the FDA apparently has new approval standards for COVID vaccines,
How so?
requiring placebo-controlled trials now, even for younger adults. The analyses suggest this specific change may delay the approval of that flu-COVID combo vaccine, so a direct regulatory hurdle.
And the market itself.
Fundamentally different now. The sources talk about the normalization of COVID into a seasonal commercial market. That means much lower vaccination rates than during the peaks.
Which directly hits their sales.
Exactly. It's a key reason for that revenue decline we saw. Plus, the biotech sector generally is just described as highly competitive, both in vaccines and oncology.
How are analysts viewing Moderna, according to the sources?
Again, mixed is the word used. The average 12-month price target cited is $55.53. But the sources note a really wide range around that average, from $34 all the way up to $106.
That's a huge range. Suggests a lot of disagreement.
For sure. And the sources say some analysts remain cautious, specifically citing the falling revenue and those regulatory challenges.
Has the stock been volatile?
Oh, yeah. Described as experiencing significant volatility. The sources even mention a specific day, May 21st, 2025, when the stock dropped 7.8%.
Any reason given?
It followed the withdrawal of their application for that flu-COVID combo vaccine. So direct market reaction to news.
So the overall picture for Moderna from these sources, it's really a transition story, isn't it?
Absolutely. Moving from that incredible pandemic peak, trying to build a sustainable, diversified biotech company on their platform tech, but facing real headwinds, regulatory, market shifts, managing costs, proving out the pipeline. A critical phase for them.
And there we have it. We've just walked through the source material on GM, Akamai, and Moderna.
Yeah, three very different companies, different sectors, but all smack in the middle of these major shifts. You've got GM, the legacy giant trying to electrify, Akamai, the tech firm pivoting its core business, Moderna, the biotech star working to build something lasting beyond its initial breakthrough.
And hopefully, by pulling out the key numbers, strategies, and the hurdles mentioned in these analyses, you feel a bit more informed about where each one stands right now. What they're trying to do, the challenges they face, all based on the source material.
And we have to say it one last time, because the sources really hammer this home.
Yeah.
This was all informational, drawing directly from the analyses provided. It's not investment advice.
Definitely not. It's about understanding the landscape presented in these documents.
Right.
So maybe a final thought to leave you with, and kind of tying these together. You look at these three: an automaker remaking manufacturing, a tech company reshaping services, a biotech firm pivoting R&D in its whole commercial model. What does just the variety of these deep transformations tell us about? Well, about the business world right now, the pace of change.
That's interesting.
And think about the different kinds of risks: regulatory issues hitting Moderna, supply chains for GM, market competition for Akamai. How do those specific types of challenges maybe shape their different paths forward?
Those are definitely big questions. Food for thought about the broader economic climate, for sure.
The sources provided a great starting point, a great lens. There's always more to dig into, of course. Keep exploring.